Welcome back, and today is TGIF Friday, 23rd September, 10:30 p.m. Singapore Asia time and 10:30 a.m. Eastern Standard Time. How's everybody? This is officially the day two of the interest rate hikes, and I want to make sure all of you are doing really, really fine. And I want to welcome all of you to the live stream. Let me turn on the live chat right now and say, welcome back, all of our wonderful warriors. And first off, while I wait for you to do the live chat with me on YouTube, Facebook, Twitter, LinkedIn, you can do a live chat with me right now. My sincere apologies. Yesterday, we missed one live streaming session. And typically, it takes a lot out of me to miss one live stream together with you. So let me let me ask you one important question. What is the one thing that you will drop everything from whatever you are doing and just go and focus on that one thing? One more time. What is the one thing that you will absolutely drop everything that you are doing and just go and focus on that one thing? All right. So while you're thinking about this interesting question, let me pay my regards to all the warriors who have just joined us right now. CK Leo, welcome back. Seven from Germany. Manfred and Jacqueline, I hope you are still in Vietnam. And Jeffrey, welcome back. Bokyu, Jeanette, good to see you. Isabella, Ryan, Gilbert, Daniel, Elton, John, Ivan, Kinip, Christopher, CP Wilson. Did I miss anyone? Jeffrey, and yes, welcome back. And Elton, you absolutely nailed it. When it comes to my family and my children, you will drop everything. You just drop everything and go and solve it first. So this is not an excuse or anything like that, but yesterday I got to have a good chat with my son, and there's certain things that between father and son we got to iron out. And I got to drop everything, all right? So when it comes to family is always first, and I want to encourage you guys as well. Nothing is more important than family. So my apologies to all of you who turned up yesterday, and thank you. Some of you actually, WhatsApp to our angels and find out what's happening to me and all that. And I think the angels, they don't have the full picture and thought they thought that I'm exhausted or tired or anything like that. No. I'm always very energetic about the market, all right? So thank you for your concern and dropping us really, really encouraging messages. Now, we are welcoming you back for day two because of the interest rate hikes. On a serious note, Wednesday was the interest rate hike announcement by Fed Chair Jerome Powell. And as you know, 75 basis point, we walked through this outcome before, we walked through this analysis before. And that's the reason why it is very important that we already mentally prepared for this outcome. This is not like a big surprise. But of course, many of you, I can understand, maybe I should use the word, I can hear, I can see, I can smell, I can taste your fear of the market. It is completely, absolutely normal, because most of you have not gone through like a big drop in the market. Or in fact, I want to bring up something really interesting. How many of us really here watching the YouTube channel, you have ever in your lifespan experienced an inflation? This is such an alien word. I mean, inflation has really never really happened in our lifespan. That's the reason why this all-time high inflation of 9.1, 8.5, 8.3, they always cite what? 40-year history. I mean, 40-year history. How many of you gone through a 40-year history in your own life journey just to talk about experiencing an all-time inflation high? We've never been there, done that before. Not for the policymakers, not for us, not for everyone on YouTube watching right now. It's only belonging to a rare group. I mean, they are the super boomer of all the boomers that to have gone through a high inflation era in their lifespan. For most of us, We have not been there, done that before. This is our first time. So let me encourage all of you. You are not doing something like, I want to encourage you to know for a fact that this is your first time. So let me type this out. This is your first time experiencing inflation. All right. So this is so important. Recognize that. And then you begin to understand, wow, we are going through a season right now of the market that, most of us never experienced before. But does that mean, we're going to let fear sink in and then take control of our psychology? Answer is no. All right. So this is your first time, and I encourage you to go to a live stream and chat with me to affirm your understanding of what is inflation. This is your first time. Can you please type that out? This is your first time. All right, I'm waiting for you. Here we go. All right, I see all the answers coming in. We have Liz. Yeah, Liz just did a yeah. And we have John Lim, Wilson, Christopher, Kinip, Jeffrey, Jeanette, Daniel. First time. Actually, I should not call it the first time. This should be called your first love. This is truly our first love with inflation, all right? I mean, it's like first love. Let's call it the first love. I mean, I think you shouldn't call it first time. It's called first love. Woohoo! This is our first love with inflation, all right? So, on on the candid side of things, I want to make sure this is really easy for you, much as I feel, I hear, I taste, I touch your concerns about this high inflation environment. Now, recap. 3 important points to recalibrate ourselves before we go into the analysis. And number one is really, really important. Number one, inflation data is always a lagging data. I repeat, inflation data is always a lagging data. It is not dynamic. It is not leading. Why? And this is something like, I gone through like a PhD program. One of the most challenging thing for PhD is data collection. How do you collect data? And before you even start your data collection, it must be passed and approved by the ethics committee, right? So your methodology of collecting data is key. But the problem is this. The current methodology of collecting inflation data is a backward methodology. That's the reason why it is lagging. Now, it is not able to tell you at any point in time now, as in now, what is the inflation? No one has done that. They have depended on the old tools, accumulated over the last few decades of how they go about collecting inflation data is still the same old tools. No change. And that's the reason why this is the blind spot that most people are not aware of. It is a lagging indicator. How do we know that? How do we cross-verify? How do we validate? And let me give you a very, very good answer to that. Remember last year, because inflation, it is a lagging indicator for the whole of last year, 2021. What were the Fed officials telling us? What was the Treasury Secretary telling us? What was even the President of the United States of America telling us? Inflation is within control. Recap. Why did they say that? Because it is a lagging indicator. And as a result, last year they got blindsided. All right, so I'm talking about 2021, whole bunch of monkeys out there. I think I also better start calling myself monkey already. Because I depended on the government data. I do not have a front-end dynamic live data, and I cannot challenge the government data unless I got much better data than the government, right? So I'm also one of the monkeys. We got all blindsided by a surging inflation that has kind of been lagging behind the real data. Is already soaring inflation, but the data is telling us it is not surging. As a result, 2021, everybody was even saying that, including January this year, 2022, where Fed chairman said inflation is transitory. All right? So everything I share with you right now, it begins to make sense. You can connect the dots and say, oh yeah, I remember this nasty word called transitory. It was breathed out from the mouth in January 2022 because inflation data is a lagging data. Okay, so point number one, we nail it. Point number two, then why the heck we have to raise the interest rate so high since, teacher, you're telling us that inflation data is lagging? Because let me tell you the honest, hard truth. They have not changed their data collection methodology yet. Between last year and this year, still the same old damn method. They have not changed it. So, inflation shows that we were at 9.1, dropped to 8.5, dropped to 8.3. But remember, this is lagging indicator. The real drop could be much lower than 8.3 as was announced this month, all right? But because of that, the FOMC committee members again relied on the lagging indicator to make their decision on interest rate hikes. Point number two, they can only make their decision based on what the data collection is telling them. So we got a double whammy situation. Last year, inflation was very high. He said inflation in control. This year, inflation has already dropped, but they're saying inflation is very high. You got the point right now. You must get this point correct. Okay? As a result, point number two, the Fed, using the old and existing methodology of data collection, relied on the lagging indicator called inflation to make and formulate their decisions on interest rate hikes. They decided on Wednesday, 75 basis points. Whew. I mean, there were whisperers from Wall Street Journal that they were already telling the market we should expect 100 basis points. Fed chairman stuck to the 75 basis point. But the problem is this. Because he stuck with the 75 basis point, everybody kind of self-fulfilling prophecy believed that inflation is still very, very high. You got my point right now. Their decision was made based on the inflation data of 8.3. But I'm telling you, I think the real data is much lower than 8.3, but they can only rely on published data, which is 8.3% inflation CPI. Consequence of that, Fed decides to maintain previous interest rate hike, 75 basis point. And congratulations, everybody. Right now, we got a nice round number. Which brings me, before I bring me to talk about point three, at point two, the nice round number is the collective interest rate right now is 3%. 2.25 plus 0.75, we are at 3% today, right now. Which also means that, point number two, if you are servicing your mortgage loan payment today, now majority of us, we have a mortgage loan with the banks to buy properties, the roof over our head, right? You got to add 3.25 to the 3%. That means you are paying a 6.25 interest rate, whether you're 30-year mortgage payment, 25-year mortgage payment, 20-year mortgage payment, you are getting around 6 to 6.25. Some of you could even be getting at 6.5%. That is painful for point two. And the consequence of that painful point number two, where your mortgage payment is 6% to 6.5%, resulted in fear sucking into the marketplace. That's why today we must start our YouTube with a smile. Oh, can you show me some smiles? And I wait for you on the live chat. Show me some smiles. Holy moly! Smile, smile, smile. Spelled with a S. Thank you all for your participation, which allows me to bring you to point number 3. All right? Point number 3 coming up. And thank you all for joining me. I give a shout out to Jacqueline, Liz, Chunman, John, Jeffrey, John Tran, Jeanette, and many, many more, which I can't scroll up my mouse anymore, right? Thank you very much. I'm going to move on to point number 3 right now, okay? Point 1, inflation, lagging indicator. Point 2, interest rate high resulted in your bank mortgage payment between 6 to 6.5%. All right? Easily. Which brings down to point number 3. Point number 3 is the most important point. Should you fear? Should you fear and put yourself into a corner and say, from this point onwards, I should constipate, or I should diarrhea, or I should have sleep apnea, or I should, heart palpitation, and all that kind of crazy things going to happen. No, you don't do that. Do not let fear sink into you. And I'm not saying this to you just to give you a false hope. I'm saying this to you, bearing in mind that this is your first time encountering inflation in your lifespan. First time. I believe most of you is your first time. And that's the reason why, because everybody is going through this pain together, there's so much uncertainty, it resulted in the Dow Jones breaking a very, very important line today. I want to show you what is this line I'm talking about, and that will kind of bring me out to share with you the key essence of point number 3. Here we go, mama. This is your Dow Jones. Few things to note before I show you the magical line. First, I'm going to start from here, which kind of crosses to the $30,000 line, all right? Now, why is this $30,000 line so important? Because it was the basis of us understanding Dow Jones, which crashed due to the pandemic. All right, that was in February, March, where World Health Organization declared pandemic to be an epidemic. Market crash because severe uncertainty, just like what you and I going through right now. Everybody got so much uncertainty about this concept called inflation. It is no different from back then in March, when we were facing the coronavirus, the Wuhan virus, and all kind of sexy names were given to this virus. So much uncertainties, the market decided to drop. And back then, what was the big drop? Below the 200 days simple moving average line. All right? But once the uncertainty passes through, right, the clouds swayed aside, and you begin to see the beautiful sun rays, silver lining, then this is the moment in time the market starts to move up. And it was able to go above the 30,000 line. That's the reason why this 30,000 line becomes such a strong anchor. It is an anchor to tell us when the overall saturation of fear got sucked into the marketplace. Okay? Then I'm going to move this guy, this square box here, to the right. The previous time it was tested was around, June, July period, where there's so much fear and uncertainty of the market that it decided to breach the 30,000. And finally, today, 2 days after the FOMC interest rate hike announcement, the Dow decided to breach the 30,000 mark. Now, that to me is an indication or an indicator of severe saturation of fear sucked into the marketplace. All right? This is point 3. Now, for every point 3, please watch and remember this table. Now, I myself and me, I'm going to screen capture what I drawn here as a reference point, and I'm going to keep this image on my desktop, and I'm going to refer to it very, very soon, all right? So I'm going to keep it. I've done that already. Ready? Now, once you've done that, I'm going to go right now to the year 2008 financial crisis and see if back then we got very, very similar performance of the Dow Jones. All right? So I'm going to kind of click out, move, move, move. And there you go, 2008. All right? So watch very carefully right now, because this chart could be the prophecy for our future. Okay? So ready? Here we go. Step 1. We mark out the highest point of 2008, which is similar to the highest point of 2022. Exactly right there, mama. January first week of 2008. This vertical line is no different from the January first week of 2022. And from that point onwards, the market just keep going down. Ding, ding, for 1 year. Which is what we are going through right now. 1 year. Okay? There's a lot of pain. I know. I hear you. I feel you. I see you. I tasted you. Tasted your fear. I can't touch you. This is the 1 year. But the big highlight is this. What goes down must come up, man. It cannot go down forever. If that's the case, human beings would have been wiped out hundreds to thousands years ago, because we always found a way to survive and become better, and we thrive. All right? So I'm going to draw for you a red box right now. This is the red box we are waiting for this moment. This red box, okay? A red box where it's a subset of a V shape. And we are asking ourselves every day, all night long, same question. When is this V shape coming? All right, in the red box. My thesis is working on this V shape coming in the final 2 to 3 weeks of December this year. Back then, for 2008 financial crisis, the V shape came in after President Barack Obama was inaugurated in January 2009. The new president came in. Then there was a rebound. Now, if you take the new president came in, then there was a rebound, then I would take a similar related event would be the midterm election, 8th of November 2022. Something's got to change. Change of political power play, the shift from Democratic Party to the Republican Party, something like that. And kind of correlate that with the inauguration of Barack Obama, I'm correlating that to 8 November midterm election this year. Okay? So from that point onwards, what do you observe? I'm talking about my bottom red box. The market moved all the way up, mama. Okay? So this is what we are playing out. Now, of course, I'm not like trying to make so generalization until it doesn't make sense to you and it's not real to your life. I acknowledge the fact that in this journey down, there'll be ups and downs along my red line. Ding dong, ding dong, ding dong, ding dong. Some up, some down. Ding dong, ding dong. Some false hope. Ding dong, ding dong. Up and down. Likewise, when it's going up, there's also ups and downs. Ding dong, ding dong, ding dong, ding dong, ding dong, ding dong. But generally, it still ended up going up. So this is the vision we have to stay focused on. Look at the bottom red box with a V inside. That was the point of saturation of complete fear sucked into the marketplace, which is no different to the point in time of February, March 2020, complete fear sucked into the marketplace. Now, when we are fighting inflation, the monster that we're going to call our first love, when is the complete fear sucking into the marketplace? I showed you just now, point number 3. Yes, broken below the 30,000 point. That is the V for me, the V signal for me. Now, with this hindsight, then and only then, we go back. We're going to go back to this current moment. We're going to click 1 year and move it back to the current moment. And here we go. Oops, hang on a minute. 2020 on the bottom left. And you see for yourself how clean is this 30,000. And I'm going to ask 3 questions, kind of an open-ended question for you to think about in order to survive this current bloodshed in the marketplace. I want you to ask yourself this question. What does it take for the market to go to the low of the previous low when we encountered pandemic February, March 2020? What does it take for it to go as low as that? Number 1, are we any better right now from COVID-19? I mean, it's an open, honest question where you answer really direct to the point. In my calculation, the only joker country of the world that has not tackled COVID-19 is China. The stubborn Chinese who refuse to import Pfizer or Moderna, and they do not have a vaccine for COVID-19. This is the joker card that we are facing today. I mean, the rest of the world, whether you anti-vax or you're pro-vax, somehow the people around you already injected 3 times. You boost until you cannot boost already. Until like my dad, boost over boost, his both legs swell up, all right? So, number 1, the joker card is Chinese from China. They are not vaccinated. And it's the policy of a zero COVID-19. Is this even sound to begin with? All right. And that's the reason why, over the past week, I spoke about Moderna, the only hope for China. If they only willing to buy from Moderna, the mRNA vaccine, I think the market will turn around. Okay. So first question, ding ding, which are all related to opportunities in the marketplace. When I say that, then your ding ding, your eyes open bigger. All right. First question. Who is the COVID clown? I like to call it CC. But this CC is not Clemen Chiang. This is COVID clown. All right. Who is the COVID clown until today don't want to get vaccinated? Then I go to second question. Ding, ding. Let me just try to move this guy down. All right. I'm having fun with my annotation tools right now. And here we go. Second question. Who is at war? And man, I think 2 days ago, I spoke about this stupid war that's gone beyond stupidity. It's nincompoop status already. They want to activate nuclear war. They want to activate mobilization of their own Russian people to fight a senseless war, resulting in the very own Russian men escaping out of the country. Now, in an army context, we call that army deserter. But I'm with the man out there who's leaving Russia because they don't want to kill innocent life with an unjustified war. Right? I think everybody can see through it what this war is about already. And that's the reason why there's so many Russian men leaving the country. I mean, martial law is martial law, but I feel for the man who's leaving the country. And many of them are leaving behind their wives, their mothers, the ladies. They leave them behind. But all the men, boom, they fled the country. So who is at war and how long this war will persist is the second question we got to address it openly. Right? Look at why are we asking these two questions? Because we're asking, can we go down as low as the low of 2020 February, March, all right? And then we ask the third question. Holy moly, this teacher loves to ask questions. Ding, ding. And I come back to here. We're done with COVID clown. We're done with who's at war. And what do you think is the final question? I want to give all of you a chance to participate with me on the live stream so that you are not just receiving, you're also giving. As you give, you learn more, right? So I'm going to switch over right now, turn on my music, ding, ding, and give you a chance to answer this question. What is possibly a third question? All right? So what is a possible third question to ask? Here we go. I'm waiting for you. Come on, let's go. What is a possible third question? Very good. I got the first answer coming in from Daniel, recession. From Christopher, Fed and recession. Come on, push it. Everybody have a chance to participate in this, all right? From John Lim. John Lim, you're asking the wrong question. I just tell you straight off as it is. Are you paying attention in class or not? Come on. Our question is about what will cause the current market to drop all the way to the bottom of February, March 2020. That is my question. I frame it up for you guys already, all right? Benjamin, what's the Fed chair next move? Nope, not about the Fed chair. We already covered that already. The Fed chair will forever work on a lagging data called inflation. CK is about peace. Wilson about recession. Jeffrey is about winter and energy crisis, which is very, very real, coming up, facing us real soon. Interest rate or inflation, we already covered that already just now, right? So we have fear, we have midterm election, we have China versus US war. No. China haven't started the war with US yet. Now it's US against Russia war. All right, they just addressed that in the United Nations platform. And where's the bottomless pit? No, John, I get to ask you the question. You don't get to ask me back about what bottomless pit. You have to flow with what is the right question to ask. James, increase interest rate to 4%, terminal rate of 4%. Wow, Jeffrey, you really want to go to World War III already, nuclear war. I mean, the war, I've already asked the question on war right here. I think you're maybe not understanding my question, all right? I already asked the question on war. Oops. Sorry about that. Oops. Oh dear, I just did something and let me see. Can I backtrack? I can't backtrack. So I'm asking the third question. So the first two questions, what we need to ask is re-ask about COVID clown and who is at war. And considering not just right now, it's not just Russia-Ukraine war. It's been kind of weaponized already, all right? And the final question, all right? So just ignore this one because I did something just now. So the final question boils down to this, which is most people not thinking about it right now. By the way, you guys can keep, putting on your thinking cap, challenge this thesis before I type out the answer, right? So final call for you to contribute. Ready? The final call starts right now. And the third and most important question is this. Will the US dollar be displaced? This is the central question dominating the policy thinkers behind the US politics. And they felt it. All right? So everything is, of course, in terms of economics, we can talk about inflation, we can talk about interest rate, but in terms of sovereignty and why US is always fighting wars, boils down to this. Will the US dollar be displaced? That is the most important question dominating US politics. Okay? So we can have recession, doesn't matter. We can have a bull run, doesn't matter. But the moment the US dollar is being challenged, they will react. And they have reacted already by harnessing all of the US allies to fight China in the battlefront for semiconductor chips. And the Chinese already started their campaign to drive renminbi. And this is, I think, beyond my pay grade. This is really highly complex as why they decided to raid Donald Trump's house. Very, very complex question. And I'm framing out the question for you to consider because sometimes the answer is not what it is. And that's what I'm thinking about right now. Okay? So, of course, if we can tackle these three questions, the market is ready for a super, super bull run, V-shaped recovery first, followed by a bull run like what you've seen in 2008, like what you've seen in the COVID-19, the start of COVID-19 until now. And right now, the real battle is all about inflation. But the backdrop behind inflation are these three questions. Okay? So I hope you guys nail it. And once you're okay with that, then we can go into looking for hunting opportunities. Okay, are you ready? So I just fire away and let me see your response. Let me drink some hot tea. Wow, are you ready? Holy moly. Woohoo! Okay, looks like the house is ready. Thank you very, very much, all of you, for participating very actively. I really appreciate that a lot, and keep the conversation going. And that will frame the thinking behind why we're pushing for a year-end rally. All right, I'm on the thesis. I'm speaking out clearly to all of you right now. I'm on the thesis that year-end we should have a rally, a super pan-up demand for a super bullish rally taking place end of this year. Now, I covered that extensively in our Cozy Live Trading event. Most of you in the public cannot take part in that. That's privilege for our spiking community members, all right? But over the past few YouTube live stream, I kind of touched on the topic already. So with that in mind, remember your duty is to find the most important article of today that will shape our thinking for opportunities. Every day we want to fire off one trade, and I kind of owe you guys one trade for yesterday. I'll make it up today. Don't worry about it, all right? Every day I'm still firing off trades. And with that in mind, here we go. First of all, let's sink in this idea that the Dow drops 400 points, breaks below 30,000 on fear the Fed is overdoing this inflation fight. We talk about 30,000. It has broken through. I've given you the 3 questions to frame your mind thinking how we should play this moving forward. All right? And once you have sunken in that ideology, perhaps, number one, inflation data is so lagging, inflation has already tanked. And perhaps the interest rate at a 3% collective rate right now, perhaps the next interest rate hike, they should not continue with 75 basis or higher, but they should start to drop. Maybe 50 basis, right? Because inflation data will start showing that it has already tanked. Thereby and only thereby, we've kind of prepared the market for the year-end rally, all right? So we're going to keep talking about those windows and those important dates, and make sure, if for those of you who missed out, go and watch our previous YouTube live stream. If you miss any of those previous YouTube live stream, you kind of feel very nervous because you cannot connect the dots, right? So I share with you, this is the headline of today, but I'm not coming to the most important article yet. Next thing is also, we have kind of glossed over a few of the big analyst calls for today. Now, they are the one formulating the thinking, so it's good for us to take a look. What exactly are they thinking about? Number one, Domino's. They believe that Domino's Pizza will continue to do well in this backdrop. And, this is kind of resonated with Bill Ackman's investment into Burger King, Restaurant Brands International, as well as Chipotle. So whenever you think about restaurants, you must think about Bill Ackman. And whenever you think about Bill Ackman, you must think about Chipotle and Burger King and Popeyes. All right? So then you can have a correlation and say, oh, those guys, are they doing well? Why Bill Ackman believe in them so much? He didn't even sell them out. All right? So this is important. Next, Coinbase kind of went into neutral because of tagging along with Robinhood, where SEC kind of right now going to stop pursuing the payment for order flow issue. And as a result, zero commission brokerage houses out there can finally take a breather. All right, say, woo, hang. We can continue our business as per usual. And that's the problem with SEC. They didn't give us regulatory clarity. That's the worst the regulator can ever do to all of us. Playing games all the time. And, I can't say much after the regulator come after me. Next, skip. Datadog has outperformed, so you start looking out for cloud stocks and all that. And again, you have Wendy's, you think about Burger King, Popeyes, Chipotle. Looks like all these guys kind of, doing quite well for restaurant business. And then you have Qualcomm as overweight, a strong expansion of the design win pipeline to 30 billion. Wow, that's really, really fantastic. And of course, Costco as a buy. And the reason is because their value proposition right now is resonating with their consumers. They are willing to spend at Costco. Next, app loving, Ailey, financial, all these are skip. But we're going to take a look at Tesla. And it's important to take a look at Tesla because they just got 1 million cars recall because of the stupid window. When it closes and you're going to put your fingers in between them, they supposedly claim that you'll crush your fingers. and because of that, they have to recall and they can't do a software glitch update. All right. So, welcome to the world of automotive. All right. So we will look at Tesla in a short while, and we have Snap, Fubo TV, Meta. Meta is sink so low right now. Advanced Micro Devices, AMD. So we always think about AMD, Nvidia, Qualcomm, think of them together. And finally, somebody willing to speak up for Subramaniam, the man who proclaimed that the world is in recession because of Fedx. All right. So Fedx kind of hit a very important price. Let me jump over to Fedx right now. We were looking at the low price of Fedx because of the Subramaniam comments. And right now, yes, finally touched 150. We were going for that 150 price and finally touched 150 right here tonight. Okay, so you guys kind of feel it already. You've gone through this process with me. And then you have Apple again. And very, very tempted for me to upgrade to my Apple 14, iPhone 14 Pro Max. So jump over right now to Apple, and here we go. Bang, bang. Their demand is so high, and probably this is your last chance to own it at 150. All right, this is a 150 line. It has finally touched this line, and I believe the earnings for Apple because of iPhone 14 is going to be really, really fantastic. And that's kind of round up among the analysts. And next, we're going to look at something related to Tesla. And then we'll formulate a game plan for Tesla. All right. So here you go. EV sales to hit all-time high in 2022. IEA says, but more work needed to put world on net zero path. All right, here we go. Bang, bang. If we talk about EV, there's only one dominant player today, right? And let me see, did they mention Tesla anywhere here in this article? No, they're just talking about EV as a whole market, all the big words, but no Tesla. All right? So no mention on Tesla, but let us dive into the Tesla stock price right now. We're going to take a quick glance about it. And again, probably this is your last chance to touch a strong support price, 275. All right. So it suffered a dip because of the 1 million car recall. So that is very, very reactionary, knee-jerk reaction. And we expect this guy to do well, right? And finally, I want to show you the most important article of today. Okay, I hope you guys are ready, and here we go. Bang! Buy these free cash flow favorites as the S&P 500 prepares to test the June low. Okay, here we go. We scroll down, and of course, you guys can find the article and try to read it yourself. But I just want to go straight away into which company is being mentioned. All right. So there you go. Hope all of you take a note of this. And among this, always ask yourself this leading question. Among these stocks, which one of them are led by lead investors that we are very, very confident of? Now, you guys have the data on our software, our spiking wealth management system. And based on the software, by right now, you look at the names, you should be very comfortable. Certain Certain of the stocks are led by lead investors, well-known names among our top 100. All right, go for it. First, I want to put forward to you is lead investor. Can be one, can be many. Second, I want to put forward to you which one of them got a stock buyback. Okay? Because the guy with the stock buyback is basically manipulating the earnings per share. He want to give the market the much needed boost to push the stock price up. All right. So I look at it kind of, you know, the answer. Where is it already? For those of you who've been trading with me, you have lead investors, you have stock buyback. We cannot predict the stock split, but we know which one is led by the third item, and that is what we call ding ding, a strong sector, right? If the sector is weak, no matter how good the individual stock is, the poor guy can never move, right? So that's the problem. The overall sector will have an overhang on individual stocks. And I want to give you these 3 clues so that you work on it. And for those of you who are subscribers of Don't Stop Believing trade notification, I will be firing off 2 trades today, one for yesterday and one for today, all right? So I will make up for the missed class yesterday, all right? So I want to sum up today's sharing. I think it's taking a little bit longer than usual. And thank you guys for really being patient with me, hanging out until this point in time. I hope you have benefited from the sharing. Don't panic. Interest rate announced already. Done. This week will be the worst week of Dow Jones. Done. Accept it. Move on. All right? Right now is cast our vision really far out to the year-end rally. Continue to formulate our thesis and stick to it. Don't waver. Because the market, everybody is experiencing inflation for the first time, including those jokers at FOMC. All right? So don't blame yourself. Don't be too hard on yourself, knowing for sure we are going through this battlefield together. I hope that will encourage you, and may God bless all of us. Thank you very much.